afternoon, I'm Jennifer Christian and I work as a portfolio specialist in the investment management team, and I'm going to provide you with a brief overview of this week's market summary. Following a substantial Conservative victory in the UK elections, it was a clear vote by the British public that a vote for Brexit meant they want Brexit. This win secured Prime Minister Boris Johnson the mandate to press ahead and deliver it. The result saw an element of certainty introduced to the market, seeing the FTSE close the week up, rallying 1.1% on Friday and seeing sterling rally significantly against all major currencies. From an economic perspective, this arguably adds some surety to the UK market, but clearly there is still work to be done regarding Brexit in order to give both UK corporates and indeed sterling the stability they crave. On Monday, we are to see some of the Prime Minister's cabinet appointments, even if they are set to be minor ones. And if you would like further details surrounding the election, please see Friday's General Election Market Update, which is on our website. Elsewhere, news has been relatively timid, with by far and away the most significant announcement being US President Donald Trump signing off on a Phase 1 trade deal with China. Whilst this in itself does not resolve the burning trade rhetoric between the world's two largest economies, it does stave off the introduction of the planned tariffs that were due to come into play this Sunday. These tariffs were due to hit the more significant sectors from a trade perspective, so the introduction of the Phase 1 trade deal came as a relief to global markets. We will likely see more details surrounding this initial deal next week, but it could be thought that the detail of this deal is largely irrelevant, as it is the sentiment that sits behind it that is important. We saw the policy meetings of both the US Federal Reserve and the European Central Bank on Wednesday and Thursday respectively. In the US, Fed Chair Jerome Powell made no changes to interest rates and suggested that while they remain data dependent, as it stands there are no major planned changes to policy for 2020. In contrast, the new president of the ECB, Christine Lagarde, whilst also not making any major changes to policy again, suggested that monetary stimulus remains a key supportive measure, but went on to suggest that a marriage with fiscal stimulus would be key to progressing the region's economies. So with neither central bank making any policy alterations, it suggests that they believe current data out of the core remains robust. By way of data, on Monday we saw UK industrial production miss expectations. However, given the election result, it will be intriguing to see how this data set now progresses. Monday also saw European investor confidence significantly beat expectations at 0.7%, a large boost in sentiment going into the new year. Tuesday saw Chinese inflation beat expectations at 4.5%, with the US also beating inflation expectations on Wednesday, with CPI coming in at 2.1% year on year. On Thursday, inflation data in France and Germany both came in line with expectations. Now that's all from me this week, and don't forget, if you haven't already, you can also read a more detailed insight into matters affecting the markets in the email.